Top gold price drivers. There's a myriad of reasons to invest in this 5,000-year-old safe haven asset. Ask any wealthy investor and they will tell you. There is no counterparty risk. A fiat dollar or banknote is a liability on a bank's balance sheet. Because physical gold is a hard asset owned exclusively by you, the only risk is your poor investment and security decisions. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. Physical gold can't go bankrupt or default. You can always bank on physical gold because, unlike corporations or governments, it can't go bankrupt or default on its obligations. This inherent stability is one of the key reasons why gold has become a preferred store of value for over thousands of years. No matter the economic climate, the value of physical gold remains intact because it doesn't rely on a third party's ability to fulfill a promise or an obligation. When you invest in stocks or bonds, you are essentially trusting an issuing company or government to fulfill their financial obligations. If they go bankrupt or default, your investment could be worth little to nothing. Moreover, physical gold cannot be devalued by monetary policies like excessive money printing. On the contrary, gold actually benefits. It's a tangible asset that has outlived countless currencies, business cycles, market crashes, and remained a store of wealth throughout various economic upheavals. Gold's value becomes even more salient given the present rate of record deficit spending by the US government and the present debt to GDP ratio of over 120%. This unsustainable national debt is only amplified by the current interest rates, resulting in approximately $1 trillion owed on the interest alone. These unsustainable economic variables will inevitably result in inflation when the Federal Reserve has to monetize this debt. It's not a matter of if, it's just when. As seen throughout history, a debt crisis inevitably leads to a currency crisis. Hence, this poses the major counterparty risk to the purchasing power of the dollar, as well as keeping one's savings within the dollar. Lastly, unlike paper or digital assets, physical gold is not vulnerable to cyber threats. Often referred to as the last real form of analog money, physical gold, insured and stored securely, ensures offline access to actual money. This further enhances gold's role as a safe haven asset. Furthermore, the counterparty risk of owning gold investment products or paper gold, such as ETFs and gold certificates, will be discussed in a later video. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. World central banks buying gold in record amounts. The U.S. Federal Reserve's approach to increase the money supply and monetize the ever-growing national debt will in turn weaken the dollars being held by foreign national banks around the world. Given this fact, countries with sizable dollar reserves are increasingly converting their reserves into tangible assets such as gold. Nations like India, Russia, China, and Brazil are leading this trend by buying gold at an unprecedented pace, disrupting the balance of power between the East and the West. In years 2022 and 2023, central banks around the world have purchased more gold than any time in recorded history, according to the World Gold Council. In 2022 alone, central banks collectively increased their purchases by 152% to more than 1,100 tons. This was an all-time historic high. This mass increase in gold holdings and exodus from the US dollar as a central bank asset is not just isolated to the emerging and expanding BRICS nations. Polish and Dutch central banks within the Western nations are increasing their gold purchases as well. In 2023, the Polish central bank stated that they want to double their gold reserves to up to 600 tons. By amassing gold, these institutions are tactically positioning themselves to counteract potential losses that they perceive with the dollar in the medium and long term. If the smart money is buying gold for what they perceive as growing weakness in the US dollar, it only makes sense that the ordinary citizen prepare as well. This trend isn't just about hedging against inflation or economic instability. It's a calculated move to diversify reserves and reduce reliance on the dollar. Central banks are essentially returning back to the historic money status of gold, both as a form of diversification, a hedge against potential crises, and its scarcity of supply. Stated simply, central banks can't print more gold. The trend is clear. Central banks are no longer selling gold, they're buying it. They're reducing the supply on the markets, effectively driving up the demand and the price of gold. As the collective acquisition of gold increases and the reserve holdings of US dollars decrease among these central banks, this will gradually create increased inflation of the US dollar, as the existing supply will be exported from foreign nations back to the United States. Other international currencies don't offer a compelling alternative, as they are based on unconvertible fiat paper. The lack of a strong alternative accelerates this process of de-dollarization, leading to increased demand of gold and thereby weakening the dollar's position as the global reserve currency. Gold is the only true global currency that is accepted due to its time-tested trust and store of value. No other form of money has this legacy and has withstood thousands of years of countless economic cycles. Fortunately, this move away from the dollar will be gradual, which buys time for the ordinary investor. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.